Hello, my friends, and welcome on our next webinar. Today, we will talk about the most powerful trend continuation patterns. We already talked about the basics of the forex market. You know what the forex market is, and also we talked about candles. We talked about candles on Tuesday, and now we move further and I will show you the most powerful trend continuation patterns. Because you have two types of patterns, you have trend continuation and trend reversal patterns, but of course I will explain everything. Before this, let me introduce myself first. My name is Tomasz Wisniewski. I'm on the market for 12 years. During this time I had like hundreds of webinars and seminars across the globe. I'm not only teaching, but I'm also trading professionally. So I'm not afraid to show my results, to share my knowledge, to share my trades live. I did plenty of live trading sessions. So everything is extremely transparent, my friends. I will not show you a lot of slides. We will do a practical session. So I will show you examples which are right now on the market. But first, we need some background. So, guys, trend formations, trend continuation patterns, trend continuation formations are part of the technical analysis. Technical analysis is, in general, you're looking at the history prices of one particular asset, and based on the previous movements, based on the current movements, you try to estimate if the price will go up or down, pretty much. You can do this by looking at the chart because price is repeating certain patterns, certain behaviors over time. And it's because of the fact that all trading that is going on is based on human psychology. Even automated trading is based on human psychology as well. Automated trading is based on indicators, oscillators, and also on the previous price movements. And those are based on the previous price movements, which are based on human psychology before. So, my friends, patterns are part of the technical analysis as candles are, for example. And the price is making certain objects, certain patterns on the chart, and those were found to be effective. So price over time, over years, was making certain pattern, like a rectangle, let's say, a rectangle. And this rectangle resulted in, let's say, 60% with trend continuation. So smart guys over years found this thing out. And thanks to them, thanks to this research, and thanks to our own research, we know that rectangles work. This 60% is the key because we don't know the hard data. It's actually impossible to find like the exact data. We can analyze, let's say, one instrument over some period of time or 10 instruments, but it's impossible to analyze all the instruments in the world, right? So we cannot get like the proper data of efficiency of the patterns, but it's more than a half, it's more than a 50%. And even this, knowing that the price can go up or down, knowing this can give you an edge over the market. Okay, so those patterns repeat over and over, and when you see this pattern appearing, being created on the chart, you can take advantage of it. Okay, again, it works over 50% of the time, but it does not work 100% of the time. You have to be aware of this, that patterns are you also have false patterns, fake patterns, broken patterns. It happens, but in general, patterns, formations work. And today we're going to focus on trend continuation patterns because it is always more probable that the trend will be continued, right? So trend reverses only once. We will be talking about trend reversal patterns on our next webinar, but in general, trend like to be continued. They like to be continued, okay? So this is the power of the trend continuation patterns, that you see them and they promote the movement which is more probable. You can see trend reversal pattern very often, but trend reversal is less probable than trend continuation. That's why trend continuation patterns, we start with trend continuation patterns because they are more reliable and they more often give amazing trading signals. And among those patterns, you have flags, wedges, triangles, rectangles. You have pennants, but pennant is a small time frame symmetric triangle. We have more, of course, but as you can see, the name is the most powerful trend continuation patterns, not all trend continuation patterns in the world. So I picked those 4 for you, and let me explain all of them using the whiteboard. So let's start, my friends, with flags. Okay, flags. So as you know, trends move in the direction, and then you have a correction. You have a main trend, uptrend, correction, uptrend, correction, uptrend, correction, uptrend. Then you have reversal, correction, reversal, correction. Then maybe another uptrend. That's how price moves. Sometimes the price moves like this, which is a sideways trend, where it is hard to spot a correction, although you may find like this, for example, I don't know, this is a correction, this is a correction, this is a correction, okay? But in general, price moves like this. So again, we are talking about flags. So those corrections which I highlighted previously can have different shapes. And now we will talk about flag. Flag, in general, for example, Polish flag looks like this. So you may expect something like this to appear on the chart, more or less. What is important in flag pattern is that those two lines are parallel to each other, but they are not horizontal. So flag is pretty much this or this. What's that? Let me explain you. We have an uptrend and price is entering a correction. Price moves like this, then eventually breaks the upper line of the flag and goes with a correction. And this, my dear friends, is a flag. Same goes here with a downtrend. Price goes down, starts the correction, ends the correction, and goes lower. That is a flag in a bullish trend, that is a flag in a bearish trend. So you can see that flags are trend continuation patterns with parallel lines which are opposite to the trend. Okay, so those, maybe let's use blue one, shall we? Those two lines are pointing down in an uptrend, and those lines are pointing up in a downtrend. Why they are pointing up, not down? Because we are moving this direction. We are moving this direction. So they are pointing down and those up. That's it, my friends. Flags. You may be wondering Is it really possible that price respects two parallel lines to each other and touches them almost with a pharmaceutical precision? Yes, it is possible. That's one of the crazy and beautiful things about the technical analysis, that you have some formations like this. And I will show you this. We will look for those patterns on the chart, and believe me, we will find them, and we will find them easily. We will not struggle to find those patterns. All right, those are flags. I hope that flags are pretty much clear by now. Now, wedges. So wedge is a flag where we don't have parallel lines. We have lines which are directing opposite to the trend, and they are approaching each other. Sounds confusing. Okay, this is a wedge. How? Uptrend, price enters, and goes higher. Let's create a wedge in the downtrend. So there's a downtrend. Okay, let's create a wedge here and here, pointing up opposite to the trend, and those lines go to each other. So if we would draw them further, they would eventually touch. Okay, so here price enters the correction, here, 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 and then goes lower. But these are wedges where lines go together. They approach each other. That's not all, because we can have a wedge like this. Draw, okay, we can have wedge like this. Expanding wedge. Correction is more volatile, and eventually we have a downswing. So those lines are not approaching each other. They would if they would be going other direction. You see the difference between those wedges, my friends? Here, like this and like this. Up, 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 and down. These are all wedges. One thing, my friends, because I think it's pretty clear. So flags, lines are parallel, wedges, they are not. Let me show you flag again, and let me show you wedge again. Drop and drop. What is happening inside? Inside of the flag, price is moving like this. Up. Inside of the wedge, price is moving like this. I always say it. What is the most important thing here when the trading signal is triggered? Trading signal is triggered when the price is escaping the wedge, and escaping the wedge is here. Here it should be like this. On the flag, the trading signal is triggered when the price escapes the flag. So here. So the most, why not here? Because we don't know when the edge will, how big the wedge will be, or the flag. So it can go forever. So when you sell the bounce from the upper line, which you may think it's a brilliant idea, but then the price can do something like this, and you will be on loss. Of course, the price can also go here and then come back, but it's less likely to happen, and trading is all about probabilities. So what do you trade? You trade the breakout of the lower line in the downtrend and breakout of the upper line in the uptrend. So if you trade breakout of the support here and here, what is going on with the upper line is less relevant. If it's parallel to the lower line or not, it's less relevant. The price can make those highs here. The price can make lower highs. It's not important. What is important is the breakout of the lower line, which gives us a sell signal. So if those two lines are not parallel or parallel to each other, there is not really big of a difference, because what is important in this case is the breakout here. What's the difference between those movements? Not really big one. Here those two lines are not parallel, and here they are, more or less. That's a slight difference, but there is no difference in principle. These are wedges, my friends. These are wedges. There is also a different type of a wedge, because these are like short-term wedges. And now they are long-term wedges, like this. Indices often move like this. So the price goes like this, like this, like this, like this. Big uptrend, and then eventually, boom. Recession, drop, trend reversal. It is technically a wedge, but wedges should be here. Smaller time frames, correction in main trends. Here, if a wedge is a main trend, it can reverse, of course. Wedges should be corrections. Triangles, my friends, triangles. We have, this will be very easy. You have symmetric triangles, ascending triangles, descending triangles. These are real patterns. Why? Because you would do like this, and there will be a symmetric triangle. Then you would do like this, that would be ascending triangle, and then you would do like this, that would be a descending triangle. How price moves here? Enters, and now has to escape. The thing with the symmetric triangles is that it can go both ways. So symmetric triangles can be trend reversal and trend continuation patterns. You may ask me, okay, so what's the point in using trend symmetric triangles if we don't know where will be the breakout? That's the thing. You don't try to foresee the breakout. You don't try to expect the breakout. You are trading the breakout when it happens. So when there is a breakout to the upside, you buy. When there's a breakout to the downside, you sell. Simple as that. On the other hand, on ascending triangles and descending triangles, the direction is known. I mean, again, it works 60% of the time, not 100% of the time, but at least you have an idea. In ascending triangle, there is a horizontal resistance. The price meets this resistance, but pushes higher, making higher lows, eventually breaks the resistance, and in a descending triangle, of course, price finds a horizontal support. Eventually, the pressure is so big that we have a breakout. These are triangles, okay? Triangles are super, super amazing trading patterns. Triangles, wedges, flags, and rectangles. Actually, I showed you the rectangle at the very beginning. But before I will go to rectangle, let me just mention that there are also pennants. Because symmetric triangles are in the long term. It is said like this. They are in the long term big patterns. Pennants, on the other hand, are small symmetric triangles, but in the small time frames. And then we have rectangles. Rectangles are pretty easy. I think the easiest trading patterns, because there are those flags which are horizontal. So flags are like this, but rectangles are like this. So we have a horizontal resistance, support, horizontal resistance, support, horizontal resistance, support. Eventually we should see the breakout of the upper line and an upswing. Beautiful. I think it should be clear by now. Let's look at the charts now. And the first chart is the chart of Apple. What do we see here? We see three symmetric triangles. I mean, two symmetric triangles and one pennant. Symmetric upswing, symmetric triangle, which is a correction. This is a flat correction, okay? Flat correction, price stops making higher highs, enters the flat sideways trend, correction. Goes higher, that's a pennant. Goes higher, that's a symmetric triangle, goes higher. If you will call them three pennants, be my guest. It's not the most important thing to differentiate the pennant and the symmetric triangles. You know, you need to approach it from the practical point of view, not from the theoretical point of view. Let's see more patterns. So here we have Westfield. On Westfield, we are inside of the symmetric triangle pattern, and we are waiting for the breakout. So it's the formation still to come. On this is Airbus, we are also in the symmetric triangle, and here we are still about to see a breakout. In the meantime, what we had? What was that? What's that? That's a pennant. In the meantime, what we had? That's a wedge. In the meantime, what we had? That's another wedge. Upswing, wedge, upswing, wedge, upswing, pennant, upswing, triangle. Beautiful. Prices move like this. Covestro, symmetric triangle. We are waiting for the breakout. Walmart, symmetric triangle or ascending triangle. This is not precisely horizontal, but it can be considered as an ascending triangle as well. Prudential. Now, that's a head and shoulder, which we'll discuss later, but what's that? For me, that's a symmetric triangle. What's that? For me, that's a flag or a wedge. And last but not least, this movement, resistance, support, flag or a wedge, breakout of the upper line, buy, right here, breakout of the upper line, buy, breakout of the upper line, buy, breakout of the upper line, most possibly a buy. And Netflix, we'll have to go on H4, because why on H4? Because of this, my friends, for example, here and here, a flag. Micron technology, wedge, upswing, wedge, upswing. Beautiful. 3M, downswing, wedge, downswing. Perfect. Honeywell, big symmetric triangle pattern. Goldman Sachs, no patterns here. eBay, I mean, we could find something, but now currently we are still in the channel up formation. Berkshire Hathaway, what's that? The last pattern that we mentioned, that's a rectangle. Horizontal resistance, horizontal support. We are waiting for the breakout. Breakout to the upside, buy signal. Breakout to the downside, sell signal. In the meantime, what was that? That was a flag. Here, kind of an ascending triangle. Not like this, more like this, more like this. Yeah. American Express. Here, just a simple wedge. Amazon, symmetric triangle and also rectangle. Apple, you saw Apple already. Today, shall we Forex, shall we? Euro to Mexican peso, upswing, wedge, What's happening here? We are breaking the upper line of the wedge. That looks like a proper buy signal and an invitation for an upswing. Ascending triangle, horizontal resistance, dynamic support. It is said that ascending triangle should be present on top. Here is like kind of in a sideways way, but the fact that we have a horizontal resistance and a dynamic support is clear. It's clear. It didn't start with an upswing because it should start with a proper upswing, like from here. It didn't, but just the principle of having rising pressure on a horizontal resistance works. Ascending triangle as its finest, euro to Polish zloty. Big ascending triangle, horizontal resistance, dynamic support, upswing. Trend continuation because trend was bullish from the very beginning. Cable, British pound to American dollar, upswing flag. We are waiting for the breakout to the upside. And here, no. American dollar to Swiss franc. Giant symmetric triangle pattern. Inside, there's a small flag. Now we are going to the upside, which can bring us a buy signal. Here, beautiful. Australian dollar to New Zealand dollar. Downswing, wedge, downswing, flag, downswing, wedge, downswing. Thank you. Euro Japanese yen, no. You can see plenty of those patterns. Sometimes they don't work. Precisely this I wanted to show you. That's silver. Upswing, correction, upswing, correction. This seemed like a correction. But I told you that breakout of the upper line of the correction in the uptrend gives a buy signal. So buy signal would be triggered here. There was no breakout, so there was no buy signal. So we cannot say that it's a failed formation. I mean, it is a failed formation because it was a flag. But this flag did not give us buy signal yet. So we cannot say that it gave us false signal because it did not give us any signal at all. Breakout, only the breakout of the upper line of this pattern would give us a buy signal. We did not see a breakout. So that's just a failed pattern, but not the pattern that you would lose money on. Because you should not trade this, bounces from the lower line. No. In case of trend continuation patterns, as I said, you trade the breakouts, not the bounces. And now after a big bounce, we have a small wedge. Most probably will result with the breakout to the downside. That's gold. In the meantime, this wedge, upswing, wedge, upswing. What's happening here is a pennant, and this pennant failed. This pennant failed. It should result with an upswing, but again, it did not give us a buy signal. We did not receive the price closing above the upper line of the pennant. There was no price closing above this line. If we would have a price closing above this line here, and then downswing, that would be a failed pattern. Yes, failed buy signal. But there was no breakout, so there was no signal. So we cannot say that it was a false signal. It is a failed pattern. It is a pennant. It should result with a breakout to the upside, but it didn't. Okay, and that's the situation now. Usually when we have a failed pattern, that's what happened. We have a strong movement in the opposite direction. Guys, I think it's pretty clear. It's really... those patterns are really great. I think that I made it really clear and approachable, and you can start looking for those patterns yourself on the charts. And I wish you all the best with that. And I'm sure that it will significantly improve your trading results if you will start to apply those patterns in your trading. Let's see each other on Tuesday. On Tuesday we have a next webinar. And I hope you will attend this webinar as well. Thanks very much and all the best in your trading. Bye-bye.